All right, it's a new week, of course, the first day of trading for the week, Monday, and of course an interesting start to the week. Not exactly what we expected, especially after how good a week we had last week, but we're going to give you that comprehensive breakdown. Welcome. This is Market Pulse on News Central in partnership with nairametrics. Here comes a breakdown of market activities and, of course, analysis of some of the stories that are driving the markets. I am Joanna Mustafa.
And I'm Frank Fagbo.
All right, let's begin with top stories from the global markets, right? Critical market events kicked off with a sharp slide in both crude oil prices and Japan's yen. Of course, with tensions easing somewhat in the Middle East and Japan's election, also injecting a rare bout of political uncertainty. The yen took a hit first thing today, sliding to 153 per dollar, to its weakest since July. And of course, the weakening yen has lifted Japan's Nikkei stock index almost 2% and nudged the dollar up more broadly, with the dollar index on course to end its best month in more than 2 years. That's a pretty big deal. Not so good news for the naira, of course. Of course, there's also relief for those that are bothered about inflation. We've seen crude oil prices have fallen sharply today, dropping more than 4% after Israel's retaliation strike on Iran over the weekend. They bypassed Tehran's oil and nuclear facilities and did not disrupt energy supply. So that's a huge relief. And of course, that should ease inflation pressures and prediction. So yes, it successfully cooled tensions in the Middle East.
We are 9 days out from the Federal Reserve's official sit down to decide what to do next with the interest rate. And this would, in one way or the other, we know that the Fed's initial rate cuts in September brought about the policy rate down by half of the percentage point to like 4.75% to 5% range. Now, this is coming after more than 2 years of battling decades-high inflation. And regarding this, we're also saying that as of today, the data has generally come in stronger than expected, with consumer spending and job creation looking particularly robust. Now, this week's data is expected to seal what the Federal Reserve does in November, next month, and we'll definitely keep ourselves updated regarding what will happen, whether the rates are going to be cut or perhaps we're still going to take a pause on that. Those appear to be the two options on the table for central bank policymakers at their next meeting on 6th of November and 7th of November, just a day or two after the U.S. election. Now, two reports this week are expected to determine that decision. Inflation and the labor market report is something we're keeping our head up high regarding what the outcome of that is going to be. Some analysts are saying that it's not likely that the data will change. Perhaps either the Fed's path downward, and I've been saying it that if we have the Fed increase the rate or cut the rate or perhaps even take a pause on that, definitely the market will react. Wait and see. That's your global market highlight. When we return, local equities market update from the NGX.
All right, not exactly the start we expected to the new week, although something had to bring us off of last week's high. It was beginning to look too good to be true. A bearish start to the trading week. We're down almost 0.75% today. If we can have the charts up, yes, we're down 0.74%. We have the fifth most capitalized stock to thank for today's dip, a 3.73 trillion naira. That's what it makes up, about 6.18% of the equities. We're talking Boa Cement, of course, and I think activities on PZ as well dragged the markets down today, 0.74%. We are back below 99,000 ceiling. We are back below the 60 trillion mark when it comes to market capitalization. But we'll see what happens ahead, and perhaps we'll be able to cement our place in above that ceiling. But coming to the top gainers list, we're seeing electrical and electronic solutions provider Unicell. They're feasting off of its 282% growth in pre-tax profits. In 9 months, its post-tax profits soared to 22.4 million naira from a loss of 4.5 million. So investors are feasting off of that, and of course that's driving the stock up. Gained 10% today, a top gainer. Livestock as well is up there as a top gainer. Transnational Corporation is back after a suspension of trading on its shares. We know that the suspension was to determine the shareholders entitled to receive the firm's reconstructed shares. They underwent a share capital reconstruction, so they're back on, and of course they're back with substantial gains, 9.95%. RT Briscoe in and out, gaining 9.84%, and Jais Bank as well completing that list. Coming to top losers, of course, we did talk about Boa Cement being one of the major causes of decline on the market today. Investors, some are saying, are perhaps taking cues from Dangote Cement's results and placing bets ahead of Boa Cement's Q3 earnings, but they are top losers, decliners today, down 10%. Lasaco as well, Dow Communications, and the rest up there as top decliners for today. Coming to top traded stocks, of course, the banking stocks had their fair share up there. McNichols, J-Paul, and Champs, as well as a top traded stock for the day. Currency, the Naira held steady decline at 1,642 Naira. That's where we are at. But up next, we have Senior Research Analyst at CardinalStone Securities, Adebayo Adebanjo. He joins us to give us more insight into what happened on the market today. Look forward to it. Picking up the pulse of the day, we have Adebayo Adebanjo, Senior Research Analyst at CardinalStone Securities, joining us now. Good afternoon, Bayo.
Good afternoon, Joanna. How do you do?
Yes, very well, thank you. And hopefully you've had an interesting day, just as interesting as it was on the NGX today. Of course, we've had results trickling in, Dangote, Airtel. Let's turn our eyes to Dangote. Their details, from Dangote Cement's unaudited financial statements, they reflect that the cement company marginally increased its 9-month pre-tax profit just by 0.6% year on year. And we're seeing operating expenses of the cement company also increase by 86.6%. What are your thoughts on this result that just came out, and how do you see it affecting not just the stock itself, but the whole industry within which it operates on the NGX?
Okay, so basically, the results are not that much of a surprise, if I'm being honest. Like we've said many times on this show, we've said that, cost pressures remain the biggest issues with the cement players as far as Nigeria is concerned. And away from cost pressures, we have, the foreign exchange challenges as well. And if you look at, let's start from top line. Typically, in Nigerian operations for Dangote Cement, Q3 is a weaker quarter, for cement producers in Nigeria. But oftentimes, we see that Dangote tends to have a better Q3 in its Pan-African operations. So that kind of tends to help to offset, whatever weakness we see in Nigeria in those periods. But this year has, turned out to be a bit of an outlier, kind of reversing that trend. We saw that Nigerian volumes were better in the third quarter this year, while Pan-African volumes were a bit weaker this year. And the reason for weaker Pan-African volumes was because of, very, very heavy rainfall in countries like Tanzania. And that kind of weighed on performance. Also, most Pan-African markets are already operating at full capacity. So to an extent, it's very difficult for you to even grow production even further. What you probably see is a decline because, output was already kind of plateauing at some levels. So we see that Nigeria kind of did better, on a volume front, and that kind of helps keep revenue much stronger. Also, pricing across Nigeria and Pan-African markets, inflation is at record highs in Nigeria, also in some other Pan-African markets, and so prices are higher there as well. So the interplay of all these factors, strong volume, strong pricing, has aided a very good top-line performance. However, coming down the profit and loss account, you'd see that cost pressures remain prevalent. Right. Of course, this is also a function of the high inflationary environment, largely energy costs, and energy costs remain, the biggest problem, across all manufacturers, even away from just, the cement industry. And you see that in recent time, there's become a kind of clamor, for a shift towards, much more affordable energy sources like the CNG. And, we'll probably get into that, much later, and what Dangote Cement is trying to do, in that regard.
Yeah, let's get into that right now. And as you've highlighted, elevated energy costs, haulage and all of that, that's affecting the company overall, right? Operating expenses. We're seeing that, I believe it was the GMD that did say they had put about $280 million, right, investment into the whole CNG initiative and they're hoping to transition 100%, of CNG trucks as part of its long-term plan. What are your thoughts on this, and do you see this changing things in the medium, short, long term for their books?
So not in the short or medium term, unfortunately. So I see this happening more in the long term. And the reason is because Nigeria as a nation has not invested much in the infrastructure that would enable the total transition, to CNG from traditional energy sources. So I think that's going to be the biggest impediment to 100% transition. However, for Dangote Cement, I think that the company is likely to leverage its sister company, which is the Dangote Refinery. And so it is possible that the Dangote Refinery might likely set up infrastructure that would necessarily aid this transition for its own CNG trucks. But based on the country as a whole, I think we're not yet there, and I think a lot still has to be done to do that. But for Dangote Cement and for other cement players like WAPCO has also been doing something in this regard as far as transition to CNG. So I think it's more of a late, medium to longer term agenda, and I think that would ultimately do well for their energy costs over time.
Yeah, I mean, having that infrastructure in place is important.
Absolutely.
So taking a look at what is happening with the industrial sector, do you perceive more tailwinds than headwind for the sector ahead? And would you say it's seen its strongest rally for 2024? The strongest rally for 2024 is literally behind it.
Well, yes, I'll take the second question first. So I would say that that's kind of behind it. And the reason is because the rally that we saw in 2024, for the most part, was not fundamentally justified. And, if I take your mind back to what happened in Dangote Cement early this year, with the activities of the likes of Osedola in that stock, we saw the kind of rally that stock saw over that period. And since then, it has materially corrected, if you've seen how it has traded over the past couple of months. So yeah, I think that's behind it. I think, the market is going to focus more on the fundamentals, as opposed to corporate actions or corporate activities here and there as far as that stock is concerned. And for the overall industry, really, I think that, there's still a lot of upside as far as revenue growth potentials exist. Already, we know that the government's body language is shifting towards infrastructure development. And I think that, with the passing of the supplementary budget, which is supposed to fund the Renewed Hope Infrastructure Debt Fund, I think that should typically aid further, cement demand, over the next, short, medium, and long term, as far as Nigeria, is concerned. So I think revenues will continue to remain strong. Prices also will be high. I think there's still room for even much higher prices as long as inflation remains pretty elevated. So on the revenue front, I think they would remain very, very solid. Okay. For the cost and margins, I think it's how well these players are able to manage their costs, in terms of energy costs, in terms of financing costs, exposure to foreign exchange. Those are peculiar to the company, and that would determine how each company would fare in the long term.
Okay, it looks like FBN Holdings is late to the party, but they still have till March 2026. FBN Holdings flagged off a major capital raise through a right issue, offering nearly 6 billion new shares, one new share for every 6 shares held, priced at 25 naira per unit share. What's your thought of this offering, and what would incentivize, or perhaps would this incentivize a couple of investors from keying in?
Well, I don't think FBNH is special. As far as the banking sector is concerned, everybody has come to the markets at one time or the other to raise capital. So I don't think FBNH is going to be any different. If FBNH wants the right issue to be successful, typically you would want it to be such that the price that you're offering it is more attractive than whatever it is going for in the secondary markets. That's just standard. So the company has to do a lot to kind of support the prices in the secondary market such that whatever rights price you're offering, it makes sense. It's a bargain for anybody who's interested in picking up, those rights, because these rights cost money. And so if it's cheaper for me to buy this stock in the secondary market, there's no reason for me to buy, to exercise, my rights, as the case may be. So I think in terms of incentivizing investors, I think that's largely what can happen there. Also, the company has to do a lot, to kind of forestall the concerns that investors have about, it as far as corporate governance, is concerned. Every time FBNH is in the news about changes of directors, changes of management, so all those issues, that instability in management, in their corporate governance, are concerning things that investors are also looking at. So I think how well the is able to sell itself, able to manage all these challenges with corporate governance, and offering, its its rights issue at a very, very attractive price will go a long way to determine how successful the capital raise exercise is.
So you think that's attractive enough?
Yeah, absolutely.
All right.
All right, we'll be tracking that and more. Of course, we're waiting to see the results of this whole exercise within the sector. But let's come now. I mean, we can't let you go without focusing on Aradel. You wrote quite a comprehensive report on Aradel in a build-up to its listing. We've seen how it has gone 3 weeks in now. Your 12-month price target was set at 1,258 naira, 61 kobo, market cap 5.43 trillion. But we're seeing now, per share it's about 600, market cap 2.61. Are you at the point, I mean, would you adjust your projections right now? Are you going to reevaluate your projection, or you think that the stock is still on track to achieving this within the next 12 months?
Okay, so what would typically necessitate a reevaluation of our estimates really would be on whatever the outcome of this whole tussle with the company, via Renaissance Consortium, and the NUPRC, as far as, the SPDC onshore and shallow water assets, are concerned. And I think, we have used some of the projections that the company has given us, in our own estimates, and that's what has pretty much driven, the kind of the target price that we currently have. And it's also important to know that our target price is exchange rate linked, meaning that because Aradel is a dollar generating company, so all our valuations were done in dollars. And so what we did is to convert, our fair value per share in dollars to naira at the exchange rate at that time. So when you look at what naira is now versus then, you might see that there have been some bit of shake-ups in what our target price actually is in naira. So, and the reason we did that was to also factor in the fact that naira is very volatile at this time, especially for a dollar generating company. So it made sense to to value the company in dollar terms. So really, the valuation really stems from whatever conversion you do, because the naira is very, very weak now relative to the dollar. And so typically, if the naira was relatively stable at levels that we saw sometime last year over the past 1 year, I think our target price might be slightly a little bit less. But away from just foreign exchange and the target price, I think that as a company, Aradel is pretty solid. And like I've always said, we've seen a lot of comparisons with the likes of Seplat. And because there isn't another company like Seplat, so to speak, on the index, I think Aradel is a close second. And so when you think about how much Seplat has rallied, and you're concerned about how expensive Seplat is, I think Aradel is another very, very reasonable option, as far as exposure to the oil and gas sector is concerned. Okay. And the major trump card, that Aradel has is its refinery business, which contributed about over 45% of its earnings in full year 23, which is a trump card that the likes of Seplat does not have. As you know, refined products tend to be of higher value than the regular crude, and so that has kind of helped bolster its earnings. So we think that that's also a major opportunity for the company.
Yeah, I mean, so many opportunities, but so many risks as well, especially the regulators play in this and the naira, the volatility. But we'll see how it all pans out. Interesting report there. Thank you very much, Adebayo Adebanjo from CardinalStone, Senior Analyst, for joining us. And that's it for Pulse of the Day. Up next, briefly, we have key metrics with Frank.
Track to exit the Financial Action Task Force. That's the FATF grey list by 2025, May of 2025. And this move will definitely boost remittances and improve and bring about foreign direct investment. Now, let's take a look at some of the key highlights. Nigeria was added to the FATF grey list on the 24th of February 2024. Now, the country also faces increased monitoring required to strengthen anti-money laundering and terrorism financing reports. We're also seeing that the FATF approved of Nigeria's fourth progress report since being placed under monitoring. Now, CBN released the report, and the report shows that they are engaging at highest level to facilitate a lot of removal from the grey list, committed to growing remittances to $1 billion within the shortest possible time. They're also partnering with IMTOs, that's International Money Transfer Operators, and Nigerian banks. Nigerian banks also launched non-resident account program to boost inflows through formal channels. We're seeing that the Deputy Governor, Ikeazor, also assured Nigerians. He said, I quote, "We have done all the work. I expect by May 2025 we should be out of the grey list." The CBN governor also committed and said that removing Nigeria from the FATF grey list is a key agenda. We are consulting at the highest level. And so we're seeing all these conversations regarding that because it's putting us on the bad light and is reducing the rate at which we're expecting remittances to come into this country. We're losing nothing less than 4.5 billion to bad press and bad impression of the Nigerian state. That is why we need to get off that list. 2025. Can't wait for that.
Yeah, we'll see what happens in a build-up to that. And of course, interesting metrics there. But our time is up for the day. It has been Market Pulse here on News Central in partnership with Nairametrics. Catch us tomorrow and every weekday, 4 p.m. West African time. I am Joanna Mustafa.
And I'm Frank Fagbo. Have a productive week.